This is the Monocle Banking Podcast. I'm Michael Avery, and today we're tapping and going. Now, South Africa may be trudging along with growth barely scratching 1%, but payments are where the pulse of the economy is quickening. From PayShop at home to perhaps across the continent, the very plumbing of money is being rewired. And at the center of this shift is Standard Bank, which has just released its 2025 white paper on payments in Africa. Joining me is Ontiretse Modise, newly appointed head of payments at Standard Bank CIB, to unpack what this revolution means for business, for consumers, and Africa's place in the global economy. Ontiretse, welcome and congrats on stepping into this new role at such a pivotal moment for South Africa's economy and Africa's payment system. What excites you most about leading Standard Bank's payment strategy in 2025?
Thank you, Michael, and good afternoon or good morning to your listeners. Look, I think payments has been a very big part of the evolution of time. And I think what excites me the most at this juncture is that Standard Bank, having been in the continent for the longest time, are able to now fuse our own innovation, put money behind some of the technology advances that we are putting together for the advancement of the continent. And therefore, Standard Bank sees itself central to the development of payment innovation, where we see regional corridors, mobile light economies, and digital savvy consumers are converging. And therefore, we are part of the answer and solutioning for payments across the continent. And therefore, this new role really puts us in a very sweet spot to direct the future architect and the design of the payment flows and money and how we impact consumer behavior and patterns of transacting over time. So, as you know, we pride ourselves on being in Africa. Africa as our home. We drive our growth. And therefore, we are always obsessed with where can we play a role to fundamentally, positively move the continent forward. And therefore, this role around payments seeks to deliver just that.
Auntie, let's be blunt though. I mean, South Africa's payments market still isn't where the policy rhetoric says it is. I mean, the Reserve Bank study shows cash is still king. 56% of all transactions by volume and used by almost everyone, while PayShop has yet to trigger a real behavioral revolution. So maybe let's start there. Why hasn't PayShop taken off the way that policymakers and banks had initially thought it would?
Yeah, look, I think let's also be frank, Michael. South Africa as an economy has got an advanced banking system, which has for years been dominated by card payments and cash, to your point. And I think the bulk of the South African consumer is used to that. It's seamless, it's effortless, the customer experience is almost certain. So that is an important data point. Equally so, I think part of the reason the Reserve Bank has started to rethink how might we bring PayShop on board. One, as you recall, there's a very strong financial inclusion as a key pillar to PayShop. One. Secondly, it was about how might we provide an alternative to cash, physical cash, given the risks, the cost of moving cash, and kind of really bring as many people who are underbanked into the financial economy, as it were. Now, we in the bank see significant amount of growth in PayShop. It is not at the level at which the Reserve Bank or the regulator may have envisioned, but there are certain indications that are telling us that it's taking off. So that's one. And perhaps as we reflect on what we think may have hampered the exponential growth we would have expected, one, I think the design of it largely was prototype on smartphones, as an example, as opposed to feature phones today. I mean, a large number of transactions in South Africa are still running via USSD. Significant amount of airtime purchases, electricity purchases, gaming purchases are still running via USSD. And it's a very big part of how people transact. I also think there was a need for us to also think about consumer education. I'm not sure whether we necessarily, as a banking industry together with the regulator, really have done enough. I think there's some room of improvement there to do. And secondly, I think the use cases have not been made that obvious to the consumer as to why is it an alternative. And I'll tell you why. Part of what we now need to do as the third iteration of PayShop is to deliver what we call acceptance, merchant acceptance for transactions. And I think the intersections between PayShop and retail for us significantly improves the prospects of it being used.
Yeah.
And more importantly, how might it be seamless, closer to card, closer to cash, in the way in which a consumer will take it up. I think those are the things, as we reflect now, we think we've got to tackle.
And I'm glad we are reflecting on that, and those are in the crosshairs, because I think you've really touched on all of the big issues, Auntie. And education's one that I kind of, in a very unscientific way, test when I transact with service providers, and I would probably say roughly 3 out of 4 that I transact with had never heard of or weren't aware that they could use PayShop. So, it's conversations like this that hopefully can also continue to educate the market. When we look at the old thorn and that chestnut cash, I mean, obviously we celebrate digital rails are moving, they're transforming it. It really is an exciting space, but cash transactions average only, 208 Rand. A lot of it, if you look at the SARB data, is mainly for airtime and data top ups. And it doesn't suggest that the cashless economy narrative is kind of going anywhere. It feels decades away, actually. So, shouldn't the focus be on making cash safer and cheaper rather than trying to replace it prematurely?
Michael, no. I mean, I think our studies are starting to tell us very differently. I mean, if you think about the rapidly changed infrastructure of banks in South Africa, from the reduction of the actual physical footprint, the moving of a number of services out of branches onto digital apps. If you think about the single biggest transactions our parents and our grandparents back in the days used to do, even in the last 20 years, was just to go into the branch and draw cash. So cash has been a very big part of how we do business in SA. But in the last 20 years, I think a lot of banks, through just looking at customer data and customer behavior, starts to signal that many of us, particularly the youngsters, are likely not to be interacting with cash in the same way. And therefore, the take up of digital payments has become significant in SA, which is one. And secondly, therefore, banks are starting to say maybe in that construct, we actually need less footprints, or we need a fit for purpose footprint that then deal with other functions that customers are looking for or services that they're looking for. I'm not sure in 2025, Michael, we can still continue to substantiate an argument that says, could we make it safer? I'm not sure. I think customers are telling us, customers are transacting digitally. The take up is immense. And I think it's because the use cases have been proven. Certainly, the customer experience has improved with the digital payments experience. And therefore, we see a significant take up. Of course, cash is not out of the system. I mean, we're not going to sit here and say cash is coming out. It is gradually coming down. But I am the view, and we certainly are as Standard Bank, that we think in the short term it will remain, but in the medium term to long term it will start to taper down, particularly if we're able to get the use cases right on PayShop, the adoption right at the right level, and then to unlock even the limits. I mean, you look at the PayShop limit, we've got to get it down up from where it is today, from 3,000 to 5,000, for 50,000, from 50,000 to into the millions. The use cases are going to be the single biggest reason why I think PayShop will displace cash. And I'm not suggesting by any measure that cash will completely disappear over our economic system, but I don't think we can continue to exacerbate the investment necessarily in keeping cash where it is.
Yeah, and it's so important, Auntie, because the more we move away from cash, the more you can start lending to township traders. You build thick files from thin file customers using that data, that transaction data. You can't do that in a cash-based economy. So it really is important that we crack the chestnut. Looking at your white paper, you highlight identity as a barrier. Over 500 million Africans without proof of ID. In South Africa, though, identity isn't the barrier, it's trust and value perception, to your earlier point. So how do we start building, and you've spoken about value, but how do we start building trust up in the cashless economy?
Look, I think that there are a number of ways, Michael, which I think firstly, I think the banks and collectively have got a responsibility to educate customers. The trust over time is about making sure that fraud detections mechanisms and monitoring capabilities in real time are there. Our customers expect us to protect them from fraud, cybersecurity, and many other means that are looking to harm and take money off their accounts. I think it's an important data point. Can they trust that when they leave money with us, they'll find them there? That's point number one. Can they trust that when they actually transact, the money moves through to the intended beneficiary? And I think that is a massive amount of shift that we've got to do for them to take. Secondly, do they have recourse? Do they know what it means in the event that an adverse incident has happened? Where do they go? Who do they raise matters with? And I think these are a big part of what we've got to do to give confidence to the digital payment economy that's taking up. And I think lastly for me is, can they actually trust that when they come to the bank and they speak to their bankers, these things could be resolved and attended to? I think that's an important piece. I think fraud detection, fraud management, security capability being in place gives confidence to the digital payment economy.
And obviously, there are a few in South Africa that still lack proof of identity. How are the partnerships with government through the Department of Home Affairs evolving to help tackle the identity barrier in South Africa, particularly in rural or underserved communities?
Yeah, look, you would have seen in the last few weeks a number of banks signing up to the continued journey of partnership with Home Affairs. I think for the couple of years, a few banks had availed infrastructure to support these initiatives. And I think there's a need now to roll it out. One is because it is a big part of what the Reserve Bank calls the payments ecosystem modernizations. You've got to solve the payment rail question, which is a pay sharp question, which I think we've dealt with. Secondly, you've got to tackle the digital financial identity piece. So do I know Michael? Do we know where he lives? Do we have his ID number? Do we understand where he works? Do we have a sense of how he transacts? This is an important part. And the first step to do it is to make sure that you are able to roll out identity document as efficiently as you can, and the process itself is digitized. And the payments for the digital identities themselves is actually digitized. That's an important piece to get right. And it's a big pillar which government has kicked off. And in this process, the objective is to get as many South Africans to be documented, to have documents that allows us to KYC, to know who they are, to know how they transact. And the point is, in all of this, Michael, you must remember that all of this over time allows for digital payments most to gain speed. So when we know who you are, we're able to understand what your requirements are. We're able to profile your credit scoring capacity. We know upfront intuitively that we actually can lend more to yourself. So I think the point is, the more people we know who they are, where they live, what they do, how they transact, allows us to actually do credit scoring, digital ID, public and private governance systems actually take root as a result of this.
Yeah.
And I think we're quite excited about the collective bank effort in South Africa to get as many South Africans on board.
It's a great example of where public private partnerships are thriving in South Africa. When it comes to regional integration and trade corridors, I think this is where the white paper gets really interesting. Cross-border trade corridors, we've got the Pan-African Payments and Settlement System. We've also got the African Continental Free Trade Area. And we know, obviously, there are non-tariff barriers, like how you move goods across border posts. But when it comes to payments, that has often been a big cost. I mean, transaction costs are often 8 to 10% higher than they really could be. This helps to bring them down. How close are we to truly frictionless cross-border payments in Africa? And what's holding us back from realizing that true integration from a financial perspective?
Yeah, Michael, I think the paper reflects on a number of things. One, we reflect on just the payment corridors in sub-Saharan Africa, to your point, but we also acknowledges the positives and the progress Africa has made. And obviously we highlight some of the challenges. One, I think, as a fact, is we are saying Africa is building momentum, I think, in intra-continental trade. And you're rightly in saying this is largely also driven by the regional payment system and integration frameworks. For instance, we think the African Continental Free Trade Area is central to this shift, which is projected to boost inter-Africa trade by like 52% once it's fully implemented. We also see that being the baseline for systems such as PAPS, the Pan-African Payment Settler Systems, as well as the East African payment systems, as well as the South African Community Real-Time Gross Settlement, the SADC RTGS systems, enabling faster and cost-effective settlement of cross-border. Because this is an important piece. We've got to get the rail infrastructure in place. We've got to, secondly, deal with the legislation frameworks from the different countries that we've got today. And therefore, we think the payment rails and payment systems are starting to be catalysts for how we get together as regional communities and say, actually, we've got a very significant trade market in the continent. And how might we actually facilitate it a lot better? I think the fragmented rules and regulatory frameworks in the continent continues to be a significant barrier. The fact that we've got different rules for different ways of processing transactions, we've got to get that across the line. But initiatives such as PAPS are fostering that debate. And we as Standard Bank are at the heart of it. And we want to see how that might go. At the same time, we are at the heart of the SADC RTGS conversations as well as the TISIP development. And we are saying what must be true for us to enable that for SADC. So lots is on the go. We are quite optimistic, Michael, that the future for payments and interoperability within the continent is bright.
I think one of the big selling points of PAPS is obviously that it removes the dollar from intra-African trade, and that currency and liquidity has always been an issue.
Yeah.
Given that currency is such an issue, how much is that aspirational versus, potential reality in your view, Onti?
Look, it's aspirational, but also I think if you think about where PAPS is as an example, I think some of the market is real because it's a local currency clearing and settlement, which is great. But look, the reality of the matter is the continent in some of the markets continues to battle interest rates, rising currency volatility, shortages of FX, and these are the realities today. But I mean, again, Standard Bank is in 21 markets today in the continent. We think we've got a pretty good sense of what good looks like and what tools we can and available to a number of our markets to enable growth and counter some of these challenges. I think at the heart of it, Michael, the consumer spending patterns in Africa has grown in spite of those challenges. You look at about the growth of about 3.9% annually since 2010, and this is expected to hit about 2.1 trillion rand by 2025. So there is a significant amount of demand for liquidity and spending in the markets. And obviously this demand is met through imports, putting pressure on, which put pressure, by the way, on foreign currency reserves and therefore leading to liquidity constraints. However, our view is that as we integrate regionally over time, start to actually have significant amount of inflows amongst ourselves in the continent, we are of the view that the ability for trade as well as payments flows will move certainly from being aspirational to reality. And I think for us, that's the kind of utopia we are hoping to achieve over time.
Onti, I'm aware of your time constraints. So just one last question. If you gaze into your crystal ball, we talk technology and innovation. Obviously, everyone talks fintechs. They certainly dominate the VC funding in Africa, over 60% of flows to fintechs. Do you think banks are still playing catch up, or have we moved on beyond that? Is it true collaboration and building ecosystems now between the banks and the fintechs and even the telcos alongside?
Look, our view is very simple. The future of banking lies in developing ecosystems, Michael. So, I mean, if you look at the examples around the super apps like WeChat, banking as a service model, platform strategies, these have been proven to deliver significant amount of exponential growth. So where we are, I mean, as Standard Bank, we're quite clear. We think partnerships and ecosystem frameworks are important to deliver to our customer base. I think the global players are continuing to position themselves to capture market locally, but we are also starting to think about what must be true for us as bank to participate meaningfully in that space. We are of the view that the opportunities here, I mean, a number of MNOs, a number of retailers are already in the space who are non-banks today. And in the past, you could argue that we have seen them as threats and risks to our own existence. But actually, if you think about it, their solutions and ours is about solving for the customer. And therefore, I think it's less to do with competing, but actually collaborating and finding conversion points for how we solve for the customer need. And in that process, payments becomes a big part of it in the MNO or the retailer or the bank or the non-financial participant to fulfill a customer requirement. And I think for us, that's key. And therefore, it's less to do with whether we are late or they are late. It's about how do we find a partnership model that delivers value to the customer.
Right. Great to hear. Ontiretse, thank you very much. This has been a real eye-opening, whirlwind conversation. Thanks for giving us a bit of a masterclass on where Africa's payments are headed. Take care.
Thank you. Cheers, Michael.
Well, payments may not grab the headlines like politics or water outages or Eskom, but as we've heard, the invisible rails carrying trade, carrying growth and inclusion. Africa's leap from cash to mobile and now to instant, frictionless platforms is much more than about being convenient. That was Ontiretse Modise of Standard Bank CIB, who's now heading up their payments division, giving us his insights into the recent Standard Bank white paper. You can download that at Standard Bank. To our listeners, that's it for this edition of the Monocle Banking Podcast. Until next time, keep your eyes on the trends shaping the future of finance. And don't forget to like, subscribe, and share the Monocle Banking Podcast. Take care.